Hey, what's up, my friends? So in today's episode, right, I want to talk about the RSI indicator and how you can use them and, improve your trading results. So it's kind of like an RSI indicator cheat sheet. So first and foremost, what is the RSI indicator? RSI stands for Relative Strength Index. This indicator is developed by J. Wilder Jr. And it's a momentum indicator, and the values of the RSI indicator, oscillates between 0 and 100. So it can never go below 0 and it can never go above 100. And the gist, right, the main concept behind the RSI indicator is that it's a momentum indicator. So in other words, it measures how fast the price moves. So the faster the price moves up higher, the greater the RSI value will be. The faster the price drop, the lower the RSI value will be. And if the price, goes up very slowly, like, it chops slowly up, down slowly, the RSI indicator will be, kind of like in the middle, 50, 55, 60, pretty much, inching its way up higher. So as you can see, the RSI indicator, the main concept that I want you to take away is that it's a measure of momentum. It measures how quickly the price goes up or how quickly the price goes down, and that's how your RSI can fluctuate between 20, 30 and go all the way up to 70, 80 or even 90, right? Especially when there's strong momentum in the market. So with this in mind, okay, the RSI indicator also has the levels between 0 and 100, but what's significant is the levels between 30 and 70, because traditionally, right, when RSI reaches the level 30, it's considered oversold. And when the RSI indicator crosses above 70, it's considered overbought. But here's the thing, right? Remember, I just shared with you that the RSI is a momentum indicator. It measures how quickly the price moves. So if the RSI indicator is below 30, let's say the 14 period RSI is below 30, what it's telling you is that over the last 14 days, right, the price has dropped a lot in the market, right? Strong bearish momentum. And it's oversold in the sense that, yes, right, there's this strong market decline, but it does not mean that the market will make a rebound. Doesn't mean that it's oversold. It will definitely go up higher. So this is a mistake that many traders make. They think that just because the RSI indicator is oversold, it means it's time to buy. Just because the RSI indicator is overbought, it's time to short. No. What the indicator is telling you is that there is strong momentum in the market. If it's overbought, it's telling you that there is strong bullish momentum. And if it's oversold, it's telling you that there is strong bearish momentum. That's the key thing, right? It doesn't mean that oversold, buy. Oversold, buy, overbought, short. No, doesn't work that way. So don't make this mistake that, I've seen many traders, make, right? Because they think oversold, is, buy, overbought is sell. No, not like this. Okay, so that's a mistake that please avoid. Second thing, right? The RSI indicator, right? As mentioned previously, it measures momentum, and the way it measures momentum is by calculating, right, its average gain relative to average loss. So long story short, right, what you can do with the RSI indicator is to set it to, or rather to use it as a trend filter to trade in the direction of the trend. So what you can do is you set your RSI settings to 200 period settings. So what it's going to do for this 200 period settings is that the RSI indicator will look through the last 200 candles, right? And it measures the average gains to average loss over the last 200 candles. So you can imagine that if the RSI indicator, or rather if over the last 200 candles, right, the average gains is more than the average loss, you can imagine that the RSI indicator will be above 50 because there's more gain than loss. Likewise, if over the last 200 candles, the average loss is greater than the average gain, then your RSI indicator will be below 50. So it's like, it can be used like a long-term trend filter. So the gist of this is that you can use the 200 period RSI, and if the price, or rather if the RSI indicator is above 50, you can conclude that this is a long-term uptrend and you can look for buying opportunities. And if the RSI indicator, if the 200 period RSI indicator is below 50, you can conclude that this is a long-term downtrend and you look for selling opportunities. Now, when I use the word long-term, right, it's relative to the time frame you're looking at, because on a 5 minutes time frame, if you have 200 candles, it will be a long-term downtrend on the 5 minute time frame. If you do this on a daily time frame, it will be a long-term downtrend or uptrend on the daily time frame. So this one, whether the trend is, when I say long-term, right, it's relative to the time frame that you are on. Okay, bear this in mind. And the third thing I want to share with you is how do you actually use the RSI indicator to better time your entry. So as discussed, right, the RSI indicator, it measures momentum in the market. So let's say RSI dips below 30, right, and then it slowly, starts to turn and cross back above 30. What does this RSI indicator, the cross, right, from below 30 back to above 30 tells you? Well, it tells you that, over the recent few candles, right, there is buying pressure stepping in, right, and that led the RSI indicator to cross back up above 30. So for those of you who are familiar with, bullish reversal candlestick patterns like hammer engulfing pattern. So the RSI indicator can be another way, right, to be used as an entry trigger if you're someone who doesn't want to go down the candlestick pattern route. So for example, if let's say you are bullish in the market and all other conditions are met and you're looking for an entry trigger to get long, you can use the RSI indicator to help you time your entry. So one example could be, RSI indicator dip below 30 and then it crosses back above 30. That could be an entry trigger for you to get long. Okay, so that is in a way, right, is to give you an entry trigger, a signal to get on board the trade after all the other conditions are met, right? So this is not a trading strategy in itself. It's only an entry trigger to trigger you to get into a trade after all the other market or rather all the other requirements are met, and that requirement is pretty much determined by you, right, and your trading plan, trading strategy. Okay, and finally, one last thing, right? You can also use the RSI indicator to capture a swing. So what do I mean by capture a swing? So swing trading is a type of trading where you look to buy low, sell high. So imagine that market is in a range between the support and resistance. So swing trading, you look to buy near support and sell at the highs of resistance, thereby just capturing this one swing over here, that one move in the market. So RSI indicator can help you capture a swing in the market. So for example, let's say you got into a long trade, maybe through a trading strategy, a trading setup that got you into a long trade. So when you exit the trade, right, to capture a swing, what you can do is exit right when your RSI indicator crosses above 50, for example, because when the RSI indicator crosses above 50, right, it means that the market has moved up one move higher. And if you're a swing trader and just want to capture one swing in the market, right, you can exit your trade when the RSI crosses above 50. So these are a few techniques, right, you can consider, right, when you're using the RSI indicator. So hopefully this that makes sense to you. And with that said, let's do a quick recap. Number one, remember the RSI indicator is a momentum indicator. It measures, how fast the price moves. Number two, don't make the mistake, alright, of buying just because the RSI indicator is overbought, or selling just because it's oversold, or shorting just because it's oversold. Number three, you can improve your winning rate with the RSI indicator by using it as a trend filter, adjusting it to a 200 period RSI. Number four, you can use the RSI indicator to help you to serve as an entry trigger to get you into a trade. And number five, you can use the RSI indicator to help you capture a swing in the market, exiting when, for example, the RSI crosses above 50 or above 55, however you wish to define it. Okay, so with that said, I wish you good luck and good trading. I will talk to you soon.